Hello dear students. Today we are going to do question number 9. And with the help of this question, we will understand what are closing entries. Closing entries are passed at the end of the year to close the accounts relating to expenses and revenues by transferring them to the trading account and profit and loss account. All nominal accounts relating to expenses and gains or incomes must be closed at the end of the year. In order to close them, they are transferred either to trading account or profit and loss account. Nominal, or we can say temporary, accounts are closed at the end of each accounting year. This means that their account balances are transferred to a permanent account. Hence, all nominal accounts are transferred to trading and profit and loss account. Nominal accounts in accounting are the temporary accounts. In other words, nominal accounts are the accounts that report revenues, expenses, gains, and losses. Though closing entries have been discussed in detail in the chapter on final accounts, that is, it is in accounts part 2. So there you will be learning it in detail. Now let us understand which accounts and where they are to be transferred. See, the accounts of opening stock, purchases, and direct expenses are closed by transferring it to the debit side of the trading account. Direct expenses means expenses which are directly related to production. Or we can say that direct expenses are the expenses which are directly related to the core business operations. Similarly, accounts of sales are closed by transferring to the credit side of the trading account. Then all indirect expenses are debited in profit and loss account. Indirect expenses means expenses incurred in managing the whole activities of the business. Indirect expenses are not directly related to the core business operations. These are necessary to keep the business up and running. On the contrary, items relating to indirect incomes and profits are credited in profit and loss account. Indirect income is one which is earned by way of non-business activities. So let's start. Let's pass the journal entries for closing the following accounts. Here, first one is interest expense account. Here it is. As we all know, interest expense, that means it is expense, and expense has debit balance. But as it is being closed, so here interest expense account will be credited. So here it is, interest expense account will be credited by rupees 1000, and as we are transferring it to profit and loss account, and there it will be shown on debit side. So profit and loss account will be debited by rupees 1000 as interest expenses and indirect expense. That's why it will be transferred to profit and loss account. Now here we will write narration, being interest expense account closed and transferred to profit and loss account. Now next, sales return account is given, that is 3000. So sales return account will be closed and transferred to trading account. We transfer sales return account on debit side of trading account. There it is, trading account will be debited and sales return account will be credited. Actually, sales return is shown as a deduction from sale to obtain net sales. Now next is purchase return account, that is 2000. We know that purchase return account shows credit balance, but as it is being closed, so here purchase return account will be debited and we transfer it to trading account. So here trading account will be credited. Now, fourth is interest received account. We know that interest received is an income and income shows credit balance. But as it is being closed now, so here interest received account will be debited. And as it is an indirect income, so it will be transferred to a profit and loss account, but it will be shown on credit side there. So here profit and loss account will be credited. And we will write narration being interest received account closed and transferred to profit and loss account. Then fifth one is advertisement expense. It is an indirect expense, so it will be transferred on debit side of profit and loss account. So here profit and loss account will be debited and advertisement expense account will be credited. Expense has debit balance, but as it is being closed, so here advertisement expense account will be credited. Then salary. Salary is also an expense. It is an indirect expense. So here we will transfer it to profit and loss account on debit side. So here profit and loss account will be debited and salary account will be credited. Then dividend received account. 700 is given. It is also an income for the business. So here if this account is closed, so it will be debited. Here dividend received account will be debited and it will be transferred to profit and loss account on credit side. So here profit and loss account will be credited. And in narration we will write being dividend received account closed and transferred to profit and loss account. Now next, eighth, purchase account. Here purchase account is given, that is 5,000. Here purchase account will be closed and it will be transferred to trading account and there it will be shown on debit side. So here trading account will be debited and purchase account will be credited. Purchase account always shows a debit balance, but as it is being closed, so here it will show it will be credited. And in narration we will write being purchase account closed and transferred to trading account. Then sales account is given, that is 10,000. So here sales account will be debited and it will be transferred to trading account on credit side. So here sales account will be debited and trading account will be credited. So in narration we will write being sales account closed and transferred to trading account. So with this, here we have completed chapter number 8. In the next session, we will be studying next chapter, that is chapter number 9, ledger posting. Till then, keep on learning and practicing. Thank you very much.